The DGRO ETF has a very solid starting dividend yield of 2.37%, which means an initial $10,000 invested into this high-quality dividend growth ETF would earn an investor around $237 per year in dividends. And for the long-term younger investors who do have some time on their side and are willing to reinvest these dividends along the years, by the time retirement comes around, they would be sitting very nice. Now in this video, we're going to do a deep dive into the DGRO ETF and expose why I think it's one of the best dividend growth ETFs investors can choose from. Now we are also going to go over the exact math of what dividend growth investors can expect to have long-term from investing into DGRO for many years. Now stay tuned because we're going to go through all this and more. Right after you please drop a like in this video and subscribe for future content like this. So DGRO, or iShares Core Dividend Growth ETF, is an exchange-traded fund that was launched by BlackRock. Now this fund invests in public equity markets across the United States. It invests in stocks of companies operating across diversified sectors. The fund invests in growth and value stocks of companies across diversified market capitalization. DGRO was first established on June 10th of 2014, so the fund is still relatively new, and for reference, DGRO was created around 3 years after SCHD, which was established in October of 2011. Now DGRO offers low-cost exposure to U.S. stocks focused on dividend growth. It allows investors to access companies that have a history of sustained dividend growth and are broadly diversified across industries. DGRO is very diversified, and we're going to go over that later in this video. Some more key facts about DGRO. The fund has around $24 billion of net assets as of recent. Also, the fund has a tiny expense ratio of just 0.08%, making the fund very cheap to hold on to. DGRO year to date is up around 3.97%, but if we zoom out, this fund does have some massive capital appreciation historically, up around 106% over the last 6 or 7 years. Now to look a little bit deeper into the current dividend yield for DGRO, it's offering around a 2.37% dividend, which was a little bit higher before the market turned, and now DGRO is up a lot in price. But still, relatively speaking, not all that bad of an initial dividend, considering there is massive dividend growth and of course the potential for massive capital appreciation for this dividend ETF. Now looking a little bit more into DGRO's dividend growth, DGRO's dividend growth on the 3-year CAGR is 7.82%, and on the 5-year around 10.64%. Now taking a closer look into DGRO's dividend history, the fund has not missed a single quarterly payment since inception and has increased their dividends pretty consistently over time. Now, one of my favorite things about the DGRO ETF is the extensive diversification the fund offers. So the fund has 19% in healthcare, 17 financials, 17% technology, 11 consumer defensive, 10 industrials. We have energy at 6%, utilities 6%, consumer cyclical at 6%, basic materials at 2%, and communication at 1%. The fund currently holds around 448 different stocks. And by looking at the top 10 holdings, it's pretty easy to see that these are really high quality, dividend paying companies that also have had a history of increasing their dividends over time. But now going back to what we were talking about at the beginning of the video, I want to see how much a long-term, younger dividend growth investor could assume that they would have in the future when it comes to time to retire, if they were to just invest $10,000 initially into the DGRO ETF and deposit around $25 a day consistently throughout the years. Also, what's going to be kind of fun about this, I'm going to do one example with drip turned on, meaning that this investor in theory would reinvest every single dividend paid, and then I'm also going to do one with drip turned off, which means this dividend investor throughout the years would be spending all the dividends as they go. So for starters, let's see where this investor would end up long-term into the future 30 years later with a $10,000 starting balance of DGRO, $25 per day invested, a 2.37% starting dividend yield, an 8% annual dividend amount increase, which is just an estimation, of course. This is all just an estimation. And then an expected annual share price increase of around 3% over 30 years. Let's take a look. So here we have it. Remember, this is with drip turned on, so this is with all the dividends reinvested. The first year, initially this investor would have $10,000 invested into DGRO and will be earning right off the bat around $239 annually in dividends. Year number 2, after the dividends are reinvested and after the around $25 a day contributed, this investor would have just shy of $20,000 of principal and already almost $500 a year in dividends. Year number 3, just shy of $30,000 and over $780 in annual dividends. By year number 5, this investor would have around $51,000 and about $1,500 a year in dividends. Skipping down by year number 9, 10, this investor would have over $100,000 now, invested in DGRO with around $3,000 to $4,000 per year in dividends. It would take until about year 15, 16 for this investor to reach a point of around $250,000 invested in DGRO with almost $10,000, $11,000, $12,000 in annual dividends paid. But as you can see, the power of compounding really kicks in, and as the numbers get bigger, the numbers keep getting bigger and bigger. By year number 25, this investor would have around $599,000 invested in DGRO with over $45,500 in dividends per year. And by year number 30, if this investor started off with $10K and invested $25 a day and reinvested every single dividend, theoretically, they could most likely retire with over $1 million invested in DGRO with around $100,000 of annual dividends every single year. But now let's go through and see the difference if we were to turn DRIP off and if this long-term investor wanted to spend the dividends pretty much as they go. So right off the bat, you are going to notice that the numbers on the principal side are pretty much the same because initially the $10,000 principal is the same and the contributions of course are the same. But what you're going to see, and what's quite interesting, is that the compounding effect doesn't necessarily kick in as hard because the dividends are not being reinvested, which just makes a point of how important it is to reinvest all your dividends if you really want that snowball effect to take shape. So year number 1, $10,000 principal, $240 annual dividends. By year number 5, almost $50K in principal and only $1,400 a year in dividends. By year number 10, $100,000 in principal and $3,800 in dividends. By year number 15, $171 and $8,000 a year in dividends. So if this investor was not to reinvest the dividends, it would take almost 18 to 19 years investing into DGRO to reach the $1,000 per month mark as far as dividends paid. And all the way down at the bottom, this investor, if they were to do everything else that we did earlier besides not reinvest the dividends, they would have only $436,000 when it comes to retirement time and $42,000 per year in annual dividends. It's no secret that the true holy grail when it comes to dividend investing is to find a well-diversified, well-positioned ETF that does have a long history of increasing their dividends on a fast basis, but also on top of that, a dividend ETF that also increases in share price over time. With an investment vehicle like this, you are not only going to see massive capital appreciation over the long term, but investors in something like this can also assume to get larger and larger payouts on a yearly basis. Now, the hard part about this is that there's so many different investment vehicles to choose from. And the reality is there are a few that constantly come up as far as a top contender when it comes to dividend growth investing. And correct me if I'm wrong, but I think DGRO definitely would make that top quality list. So there we have it. That's everything that DGRO has to offer as an ETF and some of the reasons on why I think it's one of the highest quality ETFs for a long-term dividend growth investor that does have some time on their side. But when it comes to dividend growth ETFs, especially for a younger, newer investor that does have a long time frame ahead of them, in your opinion, what is one of the highest quality dividend growth ETFs that we should look into? If you enjoyed this video, make sure to please drop a like in the video and subscribe for more content like this in the future. Thanks for stopping by, guys, and I'll see you in the next one.